Hi, I'm Heather with Heather Lange Homes. February stats are here for single family homes in Santa Clara County. Let's take a look at what we've got. The market continues to be alive and kicking, albeit with the reset that we have seen taking place from what we saw as the peak of the market this time last year. So let's dive right in. Let's take a look at what we've got with our stats for February. Active homes rose by 6% from this time last month, with pending and sold sales up by 61% and 14% respectively. Remember, pending and sold stats are a reflection of closed sales from the previous month, and we were expecting to see those pending and sold stats go higher with the start of the new year. The average days on market went down by 9%, translating into 3 days less than January, with homes taking an average of 32 days to get into market or get into contract in February. And as expected, we did see more inventory come to market after the Super Bowl Sunday. That's pretty typical. Even with that more inventory coming, more is selling faster. Months worth of inventory has gone down by 5% from this time last month, now sitting just over 2 months worth of inventory. Lower rates in January did motivate buyers to get themselves ready, to get all their ducks in a row so that they could make those purchases, that they could write those offers when the right home came to market. However, in February, early in February, we saw a stronger than expected job market, and this really spooked investors. And so we saw rates starting to go up again in February. And so this triggered it, especially for the conforming fixed rate, it triggered rates going up about a quarter of a point. The 30-year conforming fixed rate went from 6.42% at the end of January to 6.64% at the end of February, with the average sales price, the average price per square foot went up by 3%, now resting at $989 per square foot. The list to sale ratio went up by 2%, with homes selling now around 1% higher than the original offer price. So this confirms that sellers are listening to their realtors, that they're pricing their homes positioned for this reset market, and they're positioning themselves to be competitive in this new market. My activity with clients confirms this, that we are and have been seeing multiple bidding going on with homes that are priced well. They're attractive. If they're attractively priced and they're in a great condition, in a great location, then they are getting multiple interest and quickly. Although February's job market report did spook investors and we saw that the rates went up again, experts are continuing to share that they think that inflation is getting under control. It's just happening slowly, and we're going to need some time for consumers to stop spending and spending as quickly as they have been. With the job market strong, this basically means that wages went up a bit and that we have low unemployment. This is causing people to spend their money, and it's feeding inflation. That said, we are seeing reports that are also showing that savings accounts are beginning to shrink, and we're seeing reports that credit card debt is increasing. So we do know that inflation is hurting people, and that eventually we will see lower spending and slower spending. So that's what the Fed is really working towards as well. In the housing market, we're seeing this reflect in the housing market, we are seeing this reflected with the average sales price for single family homes having gone down a bit, down by 2% from January, now sitting at an average of just under 1.9 million. Again, until inflation is more under control, we'll continue to see interest rates fluctuate and rise when investors get spooked. When this happens, it is typical that we're going to see those interest rates rise. There's a saying in the industry that when rates go up, they go up like a rocket and they come down like a parachute. And what's happening is basically when investors get these report results, they get spooked. They need to readjust their investments. They need to readjust their numbers. And as they do that, then the market calms a bit, and then rates will come down slightly. So we're going to be seeing that happen over these next several months. We know that the Fed is going to continue raising the prime rate to get this inflation under control. But what we also have been hearing is that it's likely that these rate hikes are going to be in smaller increments than what we saw last year. So in the meantime, February did prove to we still have lots of buyers that are out there. They're coming out in more numbers and higher numbers, and they are eager to get into homes, even with this reset market and with higher interest rates. And sellers are able to get top dollar for their homes if they are positioning themselves strategically, prepping their homes properly, and pricing them well for good attention. If you are ready to discuss next steps for either making a purchase or selling your home, please reach out to me. I am here to help you. I've got strategic, trustworthy advice, and I'm diligent as I work for my clients. I am having great success with both my sellers and my buyers in this shifted market. Reach out to me. I'm Heather, and you can reach me at heather@heatherlanghomes.com or 408-207-3130. I'm here ready to help you. In the meantime, have a great rest of your March here. We've got some rain coming, but in between, we'll have some nice sunshine, and the start to spring is upon us. I look forward to connecting again this time next month to go over stats for March. Have a good rest of your month.